This is Dan McLaughlin again, providing you with an update on my latest presentation in terms of the Irish housing market as at early February 2016. We can start by having a look at house prices nationally, and this chart shows you the year-over-year change in the CSO house price index. You can see that having fallen very significantly for a long time, the market really began to change in 2012 into 2013, and we saw very strong house price growth in 2014, with house prices rising by around over 16%. Yet in 2015, what we also see is that the pace of growth has slowed, and at the end of 2015, house prices had risen by 6.6%. So quite a pronounced deceleration relative to the previous year. If we dig a little deeper, though, we can see that there is quite a divergence in price trends in the capital and the rest of the country. Dublin had significantly outperformed, of course, in the initial phases of the recovery. But as this chart shows, you can see from the blue line, which is the annual change in prices in Dublin, we've seen a very significant slowdown there, with prices at the end of 2015 rising by just over 2%. Whereas if we look at prices in the rest of the country, the pace of growth hasn't greatly changed through 2015, and at the end of the year, prices outside the capital had risen by just over 10%, a similar rate of growth as seen in 2014. We can see the change in price dynamics more clearly when we look at price changes over a shorter time frame. In this chart, we look at residential price movement over a 3-month period. And if we concentrate on Dublin, you see the very rapid growth in 2014. In fact, in the second quarter, as you can see, prices rose 11%, so that's just 11% in 3 months. And then in the third quarter, we're still seeing something like 9% growth, so very rapid expansion there. But as you see, fairly pronounced slowdown as well. Dublin prices actually fell a little in the first quarter, picked up then in Q2 and bounced back quite strongly in Q3, but again finished the year very weakly with a small decline in Q4. If we then turn to the rest of the country, you can see it's quite a different pattern. The price growth that we saw through 2014 did pick up momentum, but it's still much weaker than Dublin. But then a big change in 2015. Second quarter, house prices in the rest of the country grew by less than 2%, but then in the third quarter, in the 3 months, they rose by over 4%, and then in the final quarter again by around 3.5%. So still strong growth in the outside of the capital, and clearly a very significant divergence now. The interesting thing as well, I think, if you look both prices both in Dublin and the rest of the country actually fell slightly in the first quarter of 2015. So there was probably an announcement effect in terms of the new macroprudential mortgage controls that the central bank brought in January. We'll examine those a little bit more closely later on, but I think the evidence would suggest perhaps there was an announcement effect from that. So how can we account for this divergence? And one way to start is to look at the demand for housing. And if we do that, it's quite difficult to see anything other than a continuation of the strong demand for housing that we've seen in recent years. For example, if we look at the Irish labour market, in this chart we see employment, and it fell very sharply during the recession. But as most people will be aware, what we've seen is a significant increase in employment over recent years. Indeed, employment has risen now by about 140,000 from the low, and that's helped to push the unemployment rate down below 9%. So clearly, the labour market has tightened significantly, and that would normally be a very positive sign for the housing market. The fact that the labour market is tightened is also evident when we look at the data for weekly earnings, which have started to show fairly solid wage growth in 2015. Obviously, as well, the fact that rents are rising means that anyone with a rental income has seen an improvement, and also the income of the self-employed is beginning to pick up. So as a consequence, when we look at total household disposable income, we have seen a pronounced change in the last 18 months or so. This chart shows you the annual change in household disposable income in Ireland, picking up the massive fall in the recession, but also the significant improvement of late. Indeed, if one looks in the third quarter of 2015, the annual change in household disposable income is very, very strong indeed. That may be revised a little bit, but all of that data, including the labour market data, would certainly support the view that the standard fundamental drivers of housing demand remain very firm. Another useful indicator of that demand for housing is in the rental market. In Ireland, over 300,000 households live in private rented accommodation. And if we look at this chart, we can see that rents have been growing strongly for some time now. Over the last 18 months or so, they've been growing at a 9 to 10% annual pace. And indeed, rents are now at record levels, having surpassed the previous highs recorded in early 2008. So that would certainly also imply that there's a tightening of the demand-supply balance for housing in Ireland. So turning to the supply side of the market, what we see is that house building has certainly picked up from extremely low levels, but is still very, very low relative to what most people think is a reasonable estimate of demand. In this chart, we see the quarterly house completions on an annual basis, and you can see that there has been an increase, as I've said. So in 2015, for example, we got over 12,600 completions, and that was an improvement on the 2014 figure, which was just over 11,000. However, a lot of studies, including from the ESRI, would suggest that housing demand is running around 25,000 per annum. So on that basis, even on the last 3 years alone, the cumulative supply shortfall is 43,000. So clearly that would suggest that we have a chronic excess demand for housing right now. Those same studies would show that about 30% of the national housing demand will be in Dublin, implying around 7,500 units would be required each year. And this chart shows you Dublin house completions, and it's very clear that particularly over 2011 to 13, the total amount supplied was extraordinarily low, at 1,500 units a year or below. We did see an improvement in 2014 with housing completions rising above 3,000, but in 2015 it eased back again to around 2,900. So if you look at the cumulative shortfall in recent years, it would point to a significant excess demand for housing in Dublin. We get a very similar picture when we look at the housing available for rent. In this chart, which is taken from daft.ie, it shows the amount of housing available for rent on that company's website. And you can see that during the downturn, not surprisingly, the supply of rental property rose very sharply to around 24,000 in a particular quarter. And now we've seen a very steady downward trend. And indeed, in the final quarter of 2015, we're down to, or early 2016, we're actually down to around 3,500 units, which is an all-time low. So very clearly there is a significant supply issue. Another significant development in the Irish housing market in 2015 was the decision by the central bank to bring in macroprudential controls on mortgage lending. Specifically, they introduced two controls. The first on terms of loan to value, with only 15% of lending allowed above an 80% loan to value limit. And in the second one was in terms of loan to income. Again, a small percentage allowed above that 3.5 times limit. The central bank did make an exception for first-time buyers, or a partial exemption, in the sense that first-time buyers can have a loan-to-value of up to 90%, but that only applies when the house price is up to 220,000. Well, most house prices in Dublin would be significantly above that, so consequently that's unlikely to have a material impact in terms of an exemption in Dublin, and would only be really, I think, of any significance for first-time buyers looking to purchase outside of the capital. So on the central bank's own research, one would expect these controls to dampen down credit growth and have a negative impact on supply and push up rents, and also have a modest impact on prices. And that certainly seems to be happening, particularly in Dublin. First of all, we look at new mortgage loans in total, as this chart does. We take a 4-quarter moving average because it is a little bit seasonal. And you can see that new mortgage loans have picked up. They're now running around an average of 6,000 a quarter, or 24,000 a year. And that's certainly a very big improvement from the lows, which were down around 3,000 a quarter. But as you can also see visually from the chart, that pace of growth seems to have slowed quite significantly over the latter part of 2015. That slowdown becomes much more pronounced when we look at approvals for house purchase. Again, we look at a quarterly figure, and this time we're looking at approvals for house purchase in terms of the previous year. And as I said earlier, there's very strong growth in mortgage lending, new mortgage lending in 2014 into the early part of 2015. But you can also see there's a very sharp change in trend. And indeed, in the final quarter of 2015, mortgage approvals were actually down over 20%. So it does seem very clear that the central bank's new controls are biting significantly, and by implication are probably having a much bigger impact in Dublin than elsewhere. There are various types of macroprudential controls that central banks can bring in, and one that other central banks have looked at is taking account of the debt service. That obviously will pick up the fact that interest rates, for example, currently are extremely low. And in this chart here, we have a look at that kind of measure of affordability going back to 1975. What the chart picks up is it looks at the average new mortgage loan in Ireland, adjusts that for the average new mortgage rate, so that gives you your annual mortgage payment, and then divides that by an income measure. And over the long run, the figure would suggest that that payment accounts for around 28.5% of income. As you can see, at times affordability has deteriorated very significantly, notably in the mid-noughties, and then it improved significantly, of course, in recent years, partly because of interest rates falling and partly because house prices declined, and therefore the average new mortgage now is significantly lower than it was. But on that kind of metric, it would suggest that affordability is still very comfortable, and indeed is around 24% on the model, which would be the best figure it has been since around 2000. One odd feature, though, of the market is that mortgage lending, although it has picked up, does not seem to be driving the market at all. In fact, if we take the number of mortgage loans for a house purchase on a quarterly basis and compare it with housing transactions as captured by the property price register, we can see that the mortgage loans basically account for only around half of transactions. So clearly something else is driving transactions, and that would seem to be either cash buyers or people who are accessing credit from elsewhere other than the main Irish mortgage lenders. Another odd feature in terms of the timing of the mortgage controls that were introduced is, of course, that we're not exactly seeing a credit boom in Ireland. In fact, as this chart shows, if you look at the outstanding amount of household debt in Ireland, it has fallen very significantly over recent years. Peaked at over 200 billion in 2008, but has since declined by around 50 billion. In other words, Irish households are deleveraging. In other words, they're repaying rather than adding to their debt. So although we have seen some growth in new mortgage lending, it's actually being offset by the repayment of existing mortgage debt. So in this chart we have a look at Irish net mortgage lending in terms of the annual change. And you can see that, in fact, the annual change turned negative in early 2010 and has been declining since, recently around 2.5% per annum. So in other words, net mortgage credit in Ireland has been negative now for around 6 years. And of course, if new mortgage lending also turns negative, which the approvals would suggest it might, that can only mean that the contraction in credit gains momentum. So what is the prospect of a significant decline in prices in Dublin and indeed in the rest of the country? And that's obviously always possible, particularly if we get an external shock or the global economy contracts. But in general, if we look at the standard determinants of house prices, and if we look at some of the standard metrics in terms of some of the fundamentals, we can see that house prices in Ireland still don't look particularly overvalued. One of the easiest things to do is to look at house prices relative to rents, as this chart does. And you can see the long run average house prices relative to rents is about house prices around 22 times annual rent, and clearly in the noughties house prices started to outpace rents very significantly, implying an overvaluation. But also since 2011 house prices are now significantly below the long run average relative to rents. So that would suggest that house prices on that kind of fundamental metric aren't overvalued. It doesn't mean, of course, that they can't fall, but the arguments, I think, for a sustained fall are not big right now, as I said, absent a very significant global shock. So if we sum up the presentation, we've shown that the Irish housing market still seems reasonably firm in terms of house prices, although we are seeing a pronounced divergence between house prices in Dublin, which have eased significantly, but house prices outside of the capital are still growing at a double-digit pace. And when we try and disentangle the demand and supply drivers of that, we can see that demand remains, as far as we can see, very, very strong. Employment is growing again, still growing strongly. Wages have picked up, so household disposable income has grown very significantly in the last 18 months or so. We're also seeing record high rents, implying a very tight demand-supply balance in the housing market. So if we look on the supply side, I think that's where the problems have clearly emerged. The annual supply of new housing is extremely low by historic standards. It has picked up somewhat, but at 12,500 or so houses in 2015 and 11,000 in 2014, That is well below the 25,000 that most people think is a reasonable estimate for the annual demand. And in terms of Dublin, of course, we've got less than 3,000 completions in 2015, again against an estimate of demand of around 7,500. So the cumulative shortfall in recent years, both in Dublin and elsewhere, is growing, and that I think is suggesting that price pressures are likely to remain on the upside. What we have seen, though, is a significant change in terms of the mortgage market, with the central bank bringing in, as we've seen, macroprudential controls. They seem to be biting, particularly in Dublin. If we look at the approvals figures, we can see that approvals in the final quarter of last year in total across the country were down 20%, which I suspect would be a bit of a surprise to the central bank. They clearly expected some impact by bringing in the controls. Otherwise, of course, why bring them in? But I think the scale of that decline, I suspect, is maybe a lot sharper than they anticipated. The new governor of the central bank has indicated that they will have a fresh look at these controls by the middle of 2016. But I think they may bring that investigation a little bit earlier if we still see further declines in approvals. So overall, I think when we look at the market, it's very clear that demand for housing is not an issue, and that these problems are all on the supply side of the market. So I think any policy policy examination would have to clearly look at why it is expensive and what are the difficulties of building housing in Ireland. I think what we can also say is that there is no economic model that I'm aware of that shows that if you bring in rental controls, which were brought in at the end of 2015, that will do anything other than reduce the supply of property rather than increase it. So that's it. We've come to the end of our presentation. Thank you for your attention. If you'd like more detailed forecasts on the Irish housing market and the Irish mortgage market, they're available on our website, www.danmclaughlin.ie, and you'll also find there some broader macro forecasts for the economy as a whole. We also do a regular blog on issues relating to the Irish economy or to broader financial markets.